Welcome back to the CEO Pulse podcast, where you get the real, the raw, and the mind of entrepreneurship. We are sitting down. It's actually a very special episode, right? So check this out. October 2020, we sat down for the first time. We had a conversation about the newly launched business, the REI Bookkeepers, right? So we have Matt and Kat. I mean, it kind of rhymes, so I remember,
Perfect.
talking about it that way. But it's today's a follow-up episode, and we're just gonna see like where they gone and how much they've grown over the last couple of years. So with us we have Matt Beans. He's one of the founders at REI Bookkeepers, and they specialize in financial advice or tax advice, right, for real estate investors, which is right up our alley. Like most people listening to the show are entrepreneurs, and a lot of them, spend a really good amount of time in the real estate investment world. So I'm excited to see just kind of unlayer the progress that you guys have had over the last couple of years, man.
I'm excited to be
Glad
here.
to have in the show.
It's
bro.
really interesting. Something we've been digging in and like how do we provide more value?
Yeah.
And one of the things that we realized is like 50% of investors even get financial reports.
Yeah.
Right. Most of them are like, hey, CPA. They look at their bottom line on their
Yeah.
tax return and they're like, oh, that's how much money I made. Terrible way to run a business.
Yeah.
Right. Looking at your numbers, that number.
Yeah.
Because what are you going to do with your profit? Have you ever gone to a hotel or the restaurant or on a date with your wife and said, hey, can I pay with my profit? Right?
Yeah.
Or if you look at the profit, and the reason why it's not real is that profit at that number is then ask your CPA where that money is. Because I guarantee it doesn't match the number in your bank account.
Yeah, it's crazy. Well, and I learned this the hard way, right? So I had a real bad CPA for the first maybe, I don't know, I want to say 3 to 4 years. And I had to go back and then redo everything in terms of my taxes. This is when I had the first business. But I was showing a profit at the end of the year, yet like the bank account was not reflecting. I was like, where the hell did it go? So one lesson that I learned, right? It's our responsibility as business owners, as entrepreneurs, to keep tabs on the accounting. Like that's gonna be, we have we'll hire a CPA and somebody to work on the taxes and everything, but there has to be something. There has to be a methodical way of keeping your finger on the pulse, right, of the business, especially on the financial side. See,
the CEO pulse.
Yeah, see what I did there? Yeah.
I did.
So yeah, that's awesome, man, and that's where you guys come in. I remember when you the first time you guys had just launched.
We did, yeah.
Yeah. And now you have over, I believe 30 clients and I mean, it's
so last time it was October, like you said, October 2020 we were on. I think we incorporated or LLC, formed that LLC in July or August. And we had maybe a handful of employees, or not employees, but contractors and real estate investors that we were bookkeeping for. And at the time, Kat was pretty much running it herself. And we were making like $2,000 a month maybe. And now we have scaled that further. And it was tricky too, right? Like we're talking October 2020. COVID hits in May 2020.
Yeah, right in the middle of just, the whole pandemic. And people were going crazy. People were getting like real apprehensive about just adding anything new, right?
Adding anything new.
Yeah.
The real estate market was what's going to go on here.
Yeah.
Everything was, we were in the middle of lockdowns. People weren't booking flights. And, at kind of right before COVID hit, it was like, oh, virtual real estate investing. And then people would travel and go look at properties. And then, like, there's so much uncertainty when we started all of this.
Oh, yeah.
And to now have 30 clients and, a couple employees and a way sharper set of skills to help people is pretty incredible.
I mean, it's like you picked the worst time to jump into a new industry, right? That and you were in the industry before, but you were in a different capacity. So how has that? Well, first off, before we jump into the nuts and bolts, give us a little bit of background on you again. Just give us a refresher of how you got to the point where you're at right now in terms of the business, how you got started, and what kind of helped you take that leap forward and finding that particular niche.
So I've always been interested in real estate investing. When I was growing up, it was Rich Dad, Poor Dad. We played the little cash flow game all the time.
Yeah.
I downloaded it on my phone. I'd play it at school. So just from a really early age, it was like real estate is just the industry I was going to be in.
Yeah.
And got into mortgages, ultimately wholesaling, and then flipping houses, and then land.
Mm-hmm.
At the same time, I kind of dragged her along on the journey with me, and the investment company that I had worked for needed an assistant, and I was like, Kat, come help them with everything. And when I left to go on my own with the wholesaling and real estate, flipping houses at the time, she said, I don't really enjoy everything about this job, but I enjoy the bookkeeping. I was like, cool, well, let's do the bookkeeping.
You don't hear that often.
Yeah, you don't, right?
I enjoy the bookkeeping.
Like, everybody hates the bookkeeping. Everybody wants to do deals and focus on everything but the bookkeeping.
Yeah.
And I was like, well, that's unique, right? Like, and valuable. So I was like, well, let's set up an LLC and let's start getting some clients. So we actually created a 6-month goal of like having X amount of clients and all this stuff, personally, so that way we didn't go bankrupt. Yeah. And we hit that goal within like a month and a half, and
I remember you saying that on the podcast. Actually, you laid out a plan of action, and I mean, it looked pretty logical, right? Just the progression of things. However, you moved it up by like 4.5 months. So you guys were moving pretty fast, actually. Yeah, way fast.
And I would say that wasn't. I don't think we can take credit for that. I think that's just the need of the market. Yeah. We underestimated how much need there was. And so something that has happened over the last 1.5 years is got into land investing, buying and selling land, doing the bookkeeping business, and that's grown to a point. And then I started a electric skateboard and scooter rental shop at Mill Ave. Yeah. And so we rent out electric scooters and one wheels and all those things. And what happened was I had way too many things going on. And we were like,
been there.
We need to shut like all of this down. So I even shut down some of the land investing. Like, I shut everything down because it always came back to the need for real estate investors was so great, especially with, I mean, inflation's going up, gas prices are going up, real estate's shifting as a whole. Like, all of these things are happening. And real estate investors, one, they're freaking out because the market is going nuts. Yeah. And two, the only time they look at their profit is on the tax statement at the end of the year. And so I realized when I was making this decision of, okay, I've got 5 different things going on. Who needs the most help? And like, where's the most need? And it's those real estate investors that are like, how much money did I even make on these flips? What can I afford these higher interest rates? To make these types of decisions and answer a true yes or no, or how to attack that strategically, you have to have the data. Yeah. And unfortunately, they don't.
Yeah, no, I completely agree, man. It's one thing to be methodical about the business itself, right? And recently, I was at a mastermind in Tampa, and one of the conversations was about how much time we spend, and how much time and effort we spend, actually effort and money we spend in fine-tuning the skill set, right, that we're trying to make money with. So we come to a point where we get really good at our thing. Okay, this is my, it's my craft, right? So we spend a lot of time, money, and effort in that craft, and get it, dialed in. We become really good.
Sales or marketing,
right?
Or
whatever your craft is, right? So if you put it, into our terms, for example, we get really good at wholesaling. We get really good at fixing and flipping. We get coaching. So we spend a lot of time getting good at that. But we don't spend nearly enough time getting good at the money part, managing the money. That's a thing, right? We're evolving, or we're this craft so we can make money, but we don't spend enough time learning about how to manage the money, how to make it last, how to allocate, how to just manage it all together. So it's really interesting, right? That there's so many. I see a lot of gaps when it comes to entrepreneurship, right? It's part of growth too. It's strategies about how to make more money and how to get better at marketing and how to do this and that and lean the systems and the processes. But what about the money part? Like, what happens once you actually make the money? Yeah, exactly. What's the real number too, right? Because you can't see on a statement on a P&L, you can see a profit of X amount. but it doesn't mean, I mean, are you accounting for taxes? Are you accounting, like, what are you actually eating, right? What are your earnings after tax, for example? That's one of them. The EAT, and, you know, what does that look like? And is that really truly going to you, or are you losing some of that cash along the way because you're just not, your chart of accounts is off, you know, or you know, things like that. And it's important stuff to understand. So how do you guys go about the entire process of working with investors? Say that I'm a brand new investor. I have a clusterfuck of records when it comes to banking information and my profits and all that stuff. What would be maybe the top 3 things that you would come in and then focus on?
So before I answer that, one is, if you're a brand new investor, get deals done and worry about some of this to the extent of set up your QuickBooks and link your bank accounts.
Yeah.
Right? Like, your primary job at a new investor is get deals done, get money in the door.
100%.
Don't worry about all this fancy stuff of setting up with the podcast and writing books and hosting meetups. Like, get deals done. That's number one. Yeah. But when it comes to, okay, we've got some money coming in and, okay, we want to kind of build a stable business rather than just a clusterfuck machine, right? Like, that's really what you have at that point, is don't do it yourself, because the amount of time and effort that it takes to learn this stuff it's a lot, and it takes away from
it's a whole entire business.
Yeah, it's literally an entire business. Like, we have employees that help us do this to execute it, because for you, like, think about how much time you spend learning how to underwrite deals, find deals, market deals, find buyers, find money to flip, find money for gap funding, like all of these things. It's like, now imagine taking that amount of time to learn how to do bookkeeping. Yeah. And while you learn how to do that, you're not doing this.
Yeah, exactly.
Which you already crafted. So the simplest thing is hire somebody. And we've got a couple questions that you would want to ask is, how much money am I making per deal? And if you're running a business, like, that's not focused on a house, right? As a real estate investor, how are you going to show me how much money I made per property? If you're running a business, it's per division or per department. So if you have online or in-store or 2 locations or whatever that looks like. So one, ask that question. And the appropriate answer for that is either going to be class tracking within QuickBooks. So we use classes and we categorize each property by class. So when you look at your P&L, you actually have 1, 2, 3 East Main Street, 5, 6, 7, 8 Rogers Street, right? And it breaks down like, this how much I bought it for, or this how much I sold it for, this how much I bought it for, materials, labor, contractor, net profit on the deal, and then operating expenses, or operating expenses, utilities, all that stuff, and then boom, net profit on that deal. And it's broken up per property. So if they don't give you that answer, probably not going to work with them unless they have, some other strategic way to do that.
Yeah.
2, your bookkeeper needs to work with your habits. Your habit, and most business owners don't look at their QuickBooks. They don't look at financial reports. And if they do, they just get confused. Yeah. Right? So what we do is we create bank accounts for each separate thing. Okay? You bought a property for $500,000, fix it up, put $250 into it, and you made $250,000 after selling it for $1 million. There are a couple things that we need to be very, very clear on is, at that point, you're not running $1 million project and you're not running $1 million business. You're running a $250,000 business, because you've got top line revenue and profit, which is the 2 things most people like to look at, right? Oh, I'm running a $2 million business.
Yeah.
Well, when you take away cost
with 190 or 1.95 million in expenses,
yeah. So you've got materials and contractors that in real estate allow you to do business, right? So you buy that house for $500,000, and in materials and contractors, subcontractors, you pay $250,000. So you have a $750,000 cost to sell this $1 million house. Yeah. So you need to run your business as if you're running a $250,000 business, and understand that you're managing $750,000 of materials and contractors. So I think that's really important, right? Because as humans, we want to be strong and big, and I think that comes from way back in the day when we were tribal and we had to survive and have authority and prove ourselves.
No, I absolutely agree. And I think like it's almost an ego thing, right?
100%.
To kind of like turn a blind eye on, okay, these are the real expenses. This is the real net profit.
Yeah.
So the number that matters really is the net number.
Well, we call that real revenue.
Mm-hmm.
So you've got top line revenue, profit, and in the middle there's real revenue, where you take away those materials and contractors.
Yeah.
Out of that real revenue is when you pay your admin, is when you pay your rent, is when you pay taxes,
right,
and yourself.
Yeah.
So,
yeah, and you after you allocate for taxes, I mean, you're looking at the percentage of profit that you actually take is very different than the
totally
normal number that you usually think about when, I mean, if you haven't been through the ringer a couple of times. So
yeah, you learn your lesson, and you either want to learn it the easy way where somebody can advise you, or the real world way where it's like you just get punched in the face with the tax bill that you're like,
yeah. So
holy
like,
smokes.
Yeah, no kidding. So one thing that I'm doing, I'm allocating. So out of for example, every deal that we close, I'll allocate about 16%, just because of depreciation, a lot of write-offs and whatnot. But it's about a 16% allocation to my tax account, and that way I don't get incredibly surprised at the end of the year.
Mm-hmm.
The tax.
When you say account, you're not talking about in your QuickBooks. You have a separate
bank account. Yeah.
So when money comes into your income account,
exactly,
you take 15. We do 15. You do 16%.
Oh shit! I'm not far. Yeah, good.
Yeah, it's good. 15. We do 15%. So you take that money and you literally transfer it to another bank account.
Yeah. Yep.
Because what I was saying is,
don't touch it. Yeah.
It's
not mine.
Your habit, and this is where I think working with your bookkeeper with your existing habits is, you just look at your bank account.
Yeah.
Wake up, how much money do I have?
Yeah.
And if that tax account is off at a bank that you don't ever look at, you're just going to run your business off of the numbers that you have.
Yeah, you don't even consider that amount. So yeah, I mean, for example, so we'll get the revenue in, right? And I know I have, I think we're at 30% in operating expenses for the wholesale business, and it changes. So that's for the Pulse Capital is one thing, for Pulse Realty and Associates another thing, and then for CO Pulse is another number. But it's just based off of the expenses. So I'll allocate and I'll leave a percentage in there, and then do the payouts, do whatever I need to. And then when from the revenue, I'll do 16%, and 16%. I mean, depending on what tax bracket you're in, right? Like you may be paying 30, the 36% rate, but after you factor in write-offs and expenses and trips and lunches and whatever,
depreciation.
Depreciation.
Yeah.
You end up. I mean, for me, it's around the 16%, 15, somewhere in there. So, anyways, I do that, and then it's not part of my budget. So that's a whole chunk of the cash that you're earning, right? But it's not yours.
It's not yours.
It's not yours. Like you can't go buy a boat with that. Yeah.
You can, but you're selling it in 6 months.
Yeah, exactly. I mean, you can rent it, but it's you know what I mean. It's just not a strategy, right? And I think that's really one of the things that happens. I mean, that's why you have so many people scrambling at the end of the year when like, oh shit, I got Uncle Sam is here. He's knocking on my door, and I got to give him $100,000.
They're scrambling. Well, not only are they scrambling for that, but then when they go and like, how profitable is your business?
Yeah, exactly.
Right? We tend to look at profit as an event. Someday I'm going to be profitable. At this quarter I'm going to be like whatever it is. But I think it's more of a habit, and like you have that habit of pulling that tax money out. I think we need to start pulling profit money out. Yeah. Right. Like
100%. Yeah.
I run this business. I am a shareholder in this business. If you own stock in Apple or Google or whatever, right? They pay dividends every quarter. And you need to be paying yourself at minimum every quarter a dividend for being an owner in the business. Yeah. Right? Because we tend, like, a lot of businesses started out of passion. Like, we want this to work. At the end of the day, it's ran with numbers. And if you can't pull profit out of your business, it's not a good investment. Yeah.
Or my business is doing, I mean, I don't know, say like, what was your profit in the business? It was $100,000. Did you pay yourself? Like, no. Then if you have, a base salary, call that 80, it's still an expense. So your business is really being $20,000 profit. Yeah. You know what I mean? So that plays into it, also for the numbers, right? But for like self-sustainability, like you have to put yourself in there. So the way that I do it is I have salary. So I'll pay myself a salary out of each one of the businesses, and then I'll do owner's draws.
Well, that's because you're the best employee.
Yeah.
Right? As a business owner, like how many people in your business have stayed here till midnight, have got here at
None.
4 a.m., have
None.
worked for weeks or months on end without getting paid, right?
Yeah.
If somebody walked in your door tomorrow and said, Rafael, I will work here from 6 a.m. till midnight. I'll pay my own lunch. I'll pay myself to get here, and I'll do this for the next 6 months. And I'll even hire people for you to help make you more money, and you don't pay me a cent.
Yeah.
You're like,
done.
let's roll, right?
Yeah.
Like you're literally the best employee you have,
Yeah.
and you need to pay yourself for that.
Yeah, exactly. And it's important. I mean, again, like that's the kind of stuff that I wasn't aware of when I first launched, and I thought my numbers were a certain, they were at a number. It was like I wasn't paying myself. The owner's draws and all that stuff was just being done completely wrong. And the overall like money management structure, I was focused on generating revenue, which is really good, right? If you're a stage 1 business, that's what you want your focus to be in. But as soon as you start generating that consistency, you have to get smarter about how you manage the actual finances of the business. Otherwise, I mean, the wheels fall off.
100%.
It's really how it goes. So you've had this. You rolled out in 2020, and
prime time for
prime
starting
time. Oh yeah, prime time 2020 reminds me of starting a real estate business in 2008, and I mean you've seen progressive growth. Like, tell me about that curve. So let's go back into a little bit of the mindset, right, of the entrepreneur experience that you're having, because it's a little different than what we normally hear in terms of the niche, right? So how has your company been growing throughout this couple of years in terms of the marketing, the outreach? What do you see that's working well, and then what's the feedback that you're getting from people who actually come in and then implement services?
So from a marketing standpoint,
that sounds like a commercial, but
Yeah.
I'm trying to know what I'm trying to dig out is what are the biggest needs that investors have that you guys are coming across?
So the biggest needs is
Or
clarity.
challenges.
Clarity, right? Like we were saying, the market is going nuts.
Yeah.
Interest rates are going up. Here in Phoenix, like demand's going crazy, but now we're seeing an influx of supply because less people are qualifying, and all these different factors that, and a lot of investors at the end of the day haven't been in business since 2005.
Yeah.
They've been in business since 2010. They didn't experience 2008. So and we have way more social media, which doesn't help. So it's like we have all these mixed messages, and then they go home and they're like, oh, we closed the deal. Cool. How much money did we make?
Yeah.
I think we made 30 grand. And then they go and they look at their financial reports and the data's wrong, so they can't make decision. And it's like they're so overwhelmed with having to make decisions. It's like, we just need to scale. That's always the answer. We need to scale. We need to scale. Like, no, we need clarity. Like, what are we going to scale? So we had an investor that came to us, and let me know if you've heard of this strategy. You wholesale to make assignment fees, right? And then you take those assignment fees to put towards a down payment for a fix and flip.
For a separate fix and flip, or are you talking about the same property?
You wholesale wholesale properties, you make assignment fees.
Yeah.
And then
I thought you were talking about the same property.
No.
But
so you wholesale the property.
Yeah.
Make assignment fees.
Now you have cash. Yeah.
Now you have cash, you have a funding partner essentially, and now you go and you flip a house.
Yeah.
A lot of people do that.
Yeah.
So that's the strategy that he was running. And we jumped on a Zoom call. I didn't sit down with him because we do a lot of stuff virtually, but we sat on a Zoom call and we looked through his financial report, and he made, I think 70 grand in assignment fees in like 4 months, which is pretty good. I was like, dude, this is not bad.
Yeah.
In that I think he was very generous with his acquisitions team, and he paid them like $45,000. So
shit. Yeah.
super generous.
Was he not spending in marketing? What about overhead? Yeah.
Right. You're already asking these questions.
Oh yeah.
So now we're at 70 minus 45. We're at 25 grand. What's a house here in Phoenix cost? 400,000.
Yeah, right now. I was looking at the numbers today. The average median price is 500, but the most sales are happening between the 350 and 380 range.
So to acquire a flip, you're, let's say, somewhere 300,000 to 400,000.
Yeah.
So you 10% down, you need 30, 40 grand, and then a couple bucks to pay materials and labor until your draw hits, right? So you're looking like we need 50, 60 grand.
Yeah.
Well, now marketing comes into effect for wholesale.
Yeah.
50 grand on marketing. Now we're negative $15,000.
Yeah.
What do you think he did? Right? Like now we have well, at least we have clarity. Like, this is why we need to raise money. This is why we need partners, right? Yeah. This is why we're sharing our profit splits on the real estate flipping side. So what we did is, hey, let's train our acquisitions people better because they're clearly not providing enough value for the amount of money we're spending on them. And two, let's revamp our marketing because we're spending too much money on marketing.
Yeah.
So that, like, just getting that clarity and pinpointing exactly why they're not growing where they need to grow was like, I mean, at the end of the day, he was like, dude, this is incredible. And he ended up paying us twice the amount of money because he was like, dude, this is like.
Well, I mean, it's you're making it, right? You're making it back. It's an investment.
Yeah.
And like one thing that I've found, this is, you know, from personal experiences, as you're going through the process, you find out where your gaps are, where you're like just, you know, losing, you know, just taking in water, you know, into the ship, you know, for lack of a better analogy. But when you're able to just clog those holes, right, and then you know, put something between those gaps and then make it into a solid operation, you're going to lose a lot less. That's one. If you have the ability to see the bottlenecks, where you're spending, you know, say that you're there's separate things. It's a different thing, right? Having KPIs and then having navigators. Key performance indicators, those are the things that we can actually come in and then fine tune. For example, cost per deal, revenue per deal, right? If we can improve that, it's going to improve our bottom line right now. And then there's navigators that can help us improve the bottom line, but they lag. So it takes them a little bit longer to take effect. When you have your clarity in the finances, you're able to move the key KPIs a lot faster, which turns into like revenue automatically, like right out of the gate. So yeah, it's important to have a really good grip on everything and understand, man. It's understand that you're running a business. Right now, like for example, the comment that I made, like, wow, you know, in terms of the acquisitions and because he made 74K and paid 45. I mean, you're talking.
That's over 50%.
Yeah, it's what, 55, 60% that's going out to on commissions. And I get it if it's for an entire team that you have, you know, limited involvement in. But if you're still covering marketing, you're in the business, you're working hours, and you're putting all that in, it's way too much. So I think sometimes the need to be generous, you know, might want to take over, but we have to be realistic and see what's really happening, right? Now, the problem with operating like that in the blind is that if you can't keep the lights on, you know, you may help somebody out right now, but it's not going to happen again in 3 months because you're going to be out of business.
100%.
Yeah. So, how are you? What are some of the biggest challenges that you see investors deal with right now? The biggest challenges. So you mentioned clarity, not clarity over the numbers, but some of when you're having conversations, because I mean, you have to kind of dive deep into the business model side of things, right?
A lot of investors we see, they're either wholesaling, flipping, or rentals, right? Like that's really the 3 types of avatars that we're looking at, and their number one is clarity is so overwhelmingly number one, and then number 2 is like, what does all of this mean?
Yeah,
and it's like, imagine if you were going to go on an airline, right? Like you're going to go fly from here to San Diego, and right as you get on, the pilot looks back and he goes, you know what these levers do? Right? You have all the dials in the cockpit and like all this stuff. And it's like, if that's what you're doing when you're looking at your financial statements, like you're not flying your plane well.
Yeah.
So the specific problems we are dealing with is like, how much money am I making on this flip, on this acquisition, whatever? And then is what do I do to make it better?
Yeah.
And then a lot of them goes down to the allocation because they're not allocating money. It's all going into one bank account.
Yeah.
Or maybe they have a different bank account for each LLC, which is like a tax strategy, asset protection deal. But they're not allocating their money.
Yeah, the revenue, yeah.
It is so simple of like the clarity and the allocations.
So define.
That's like so far.
For somebody who's not familiar with allocations, define that.
Okay.
What does that mean?
So I want to back up, and you were talking about KPIs and navigators. There's a very clear process of how to get this stuff. One, you need accurate data. Starts with bookkeeping. We get that all cleaned up, and then we're going to run reports. Then we're going to interpret those reports and continue that accurate bookkeeping so you have continuously accurate data every single month. Mm-hmm. Look at the reports every month. Have a conversation with your bookkeeper, CFO, coach, mentor, your rich uncle, like whoever it is that you're having conversations.
Whoever knows more about it than you do.
Yeah, right.
Preferably.
And then you make decisions and you implement.
Yeah.
Right. It's a 1, 2, 3, 4 every single month. Boom, 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 boom. Your question was, sorry, I wanted to get that out because I was like,
oh yeah, no. So I was the biggest challenges that you're seeing with real estate investors.
The allocations.
Oh yeah, I'm sorry.
So
I think to elaborate on the allocations.
So what we do with allocations is we have income come into an income bank account. We're gonna have 7 bank accounts. Mm-hmm. That's what we're pushing for minimum for every single client.
So allocations basically means dividing your revenue into different buckets.
Yep. So
right?
we have an income account where all money comes in. Everything just pours into that bank account. And if you have different divisions, it can be separate income accounts per whatever. Mm-hmm. And then we're going to allocate that money. So that income account, we talked about behaviors. We're going to create a rhythm in your business, right? A drum beat. This is the beat we walk to. So we like to stick with a 10-25, which is the 10th and 25th is when we do allocations and when we pay bills. Mm-hmm. So on the 10th and 25th, we're gonna empty that income account to the 4 other separate accounts, which is going to be first profit. We're going to make sure that the business owners are getting paid because we need to keep the stakeholders happy, otherwise they're going to leave. We're going to make sure that owner's comp is getting funded so that way you're getting paid as the best employee. We're going to make sure the tax account is getting paid because Uncle Sam's coming knocking April 15th, he's coming. Yeah. And then we're going to make sure that your operating expense account has money in it to cover your bills. The other 2, so that's ideally that's going to be all with the same institution. And then the other 2 accounts is another profit account and another tax account because we need to get that off your radar. That money doesn't exist.
Out of sight, out of mind, right?
Out of sight,
you're
out
not
of
tempted
mind.
to tap into it and use it for marketing. If you're like, it's not yours.
And we're setting those 2 accounts up to where it's difficult for you to access, right? There's no you don't just log in and transfer that money, zell it to whoever. Like we want to set up. We call it the walk of shame. We want you to be like
feel bad about it.
Yeah, gosh, I got to go ask Rafael if I can access this money, right? Or I got to go ask my mom if I can go access this money. Like set something up that hurts to access it unless it's time to access it. Yeah. Come tax time, go pay your damn taxes. Yeah. Come end of Q1, go pay yourself that profit and go spend that profit on buying the boat or going on vacation or whatever that is. But that's the method that we want to use for tax, profit, operating expenses. Those are the allocations we want to look at. And they all have their own percentages. Yeah.
Yeah, and I think, those percentages also change, right? It doesn't mean that one thing with this process, because I mentioned that I run my financials are run in a similar way. I mean, mine a little different on certain things, but the principles are the same. The percentages, it doesn't mean that you do huge percentages, right? You don't have to start with, for example, on the owner's draw. I mean, the owner's draws for me, but
let's say taxes.
Yeah.
If you're not setting aside taxes yet, and next month you get a check and you just immediately allocate 15% to it, you're gonna freak out.
It's gonna
hurt.
Yeah. It's like,
So we want to build habits, right? We want to work with existing habits and over time build strong habits.
Right.
So maybe over the next 4 or 6 quarters, we work up to that 15%. Yeah. Right. We're gonna still play the game at tax time. Like, oh shoot, there's not enough money. Where are we gonna get it from? You're already good at playing that game if you're still in business. So we're still gonna play it a little bit, but not as much. Yeah. Maybe we only have 5%.
It's not gonna be a knockout hit.
Correct.
And it really becomes a matter of just allocating, getting used to putting money in certain buckets. For example, leaving money in the operating expense as opposed to just drawing out and trying to make, put it together with bandages whenever, I don't know, payroll kicks in, that sort of thing. Habits, just like in everywhere else. I mean, they're really the thing that's gonna make your business, right? We have to understand how to run the money, not just the service or that we're providing. We got that. I mean, that's why you have a business in the first place. So you may be really good at the service. You may be really good about whatever it is that you do. But if you're not good at the management of the other side, which is the cash, like, does that really matter? Does it matter that you're the best, agent out there, the best wholesaler, the best coach, if you're still broke because you can't manage money? No.
Well, we all know business is a sport, right?
Yeah.
It's the ultimate sport.
Yeah.
And how are you going to keep your score on your scorecard?
Yeah. Yeah.
Right. In football and basketball, rugby, soccer, there's a scoreboard. We can all see it. In business, it's those financial reports.
Yeah,
and
exactly.
It's financial reports and bank accounts, because you can show $1 million profit. Go ask your accountant, where's my $1 million?
Yeah.
Right. So how much money in the bank for us is the number one priority.
Yeah.
Because all the other numbers are just indicators of tracking time and what has gone on in your business.
Right.
At the end of the day, it's money in your bank account that you can pay your credit card. You can, help your mom. You can pay for your kids' school. You can do the things that actually matter.
Yeah. I have the way that just because it makes sense with the conversation that we're having, right? So I have that set up on the business side of things. So I have the operating account and operating expenses. I have a tax account and all that stuff. On the personal side, I feel like I do something similar. So I allocate whenever I get money, makes it over to my personal accounts. I'll allocate and have 4 different accounts, actually 5 different accounts for that. The first one is a create account. I call it the create account because I create memories through it. That's awesome. That's just my way of just kind of, okay, cool. I have a percentage that goes straight into that account. And I think right now I have it like at 10%. So anything in revenue, 10% goes into my create account. And then I have a wealth account. That's where all the deposits go into, right? That's what I'm going to use to create the wealth, retain the wealth. And from there, I'll disperse money to the other accounts, and then I'll leave 20% into that account and just kind of watch it grow. If I need to tap into anything for whatever reason, that's the account that I'm tapping into. I'm not tapping into a tax account. Yeah. I'm not tapping into into any of that stuff because I have that. It's just, and the crazy thing is that as you start allocating all these things or all these percentages, like you start to live on those percentages, and it doesn't mean that you're like denying yourself from I don't know, just fun stuff. If you have the money to buy, something cool, you're gonna buy the thing. You're just gonna be more, a little bit smarter about it. The third account I have, it's the live account, which is living expenses. So anything that's fixed living expenses goes out of there. And then I have a flow account where I pay off any revolving debt that I have. I just throw I think it's at 20%. I think that might be on that one too. But I throw 20% of the revenue into that one. And then just if I have, I don't know, outstanding credit card balances or whatever, I'll pay it off of that. Student loans get paid off of that, kind of stuff. And then I have an invest account where I throw another just percentage into that to have an investment fund. But that's on my personal side of things, right? And it's really cool to just go in there. It's like, all right, cool. Do we want to take a trip? Where? I don't know. Like we have $30,000 in the account. We can do whatever we want with that $30,000 because it's on the create account. Yeah. So yeah. I mean, it's and I know that it's not going to impact anything else. Like it doesn't impact the lifestyle. I'm not cheating myself out of just money for the kids or
So on the business side, you're pulling profit and the owner's draw.
Yeah.
Does the profit go into that create account, or does that go into your
wealth? Everything goes into the wealth account. Everything goes into the wealth account, and then from there I'll just drop it into the other bucket. Yeah. I'll allocate the same way that I allocate in business, just on the personal side. Yeah.
Running your business or a house like a business.
I mean,
it is a business. Yeah.
Yeah. The only thing is I can't fire any of the employees.
Can't fire the employees, and they're expensive, dude. I saw you had to pay your kid. You're like, oh yeah, this is free child labor, and you had to pay him. I was like,
yeah, right now
I'm not having kids now.
I just got suckered out of $4 right before we started the podcast. Savage. But no, I mean it's important to have that financial IQ, right? We can go, through the ringer and then make mistakes and try to figure all this out, or just go, to somebody who's already doing it.
What I think is beautiful about it is it's so simple. There's going to be a little bit of a learning curve, but it is so simple. And when you think about the statistic that 50% of investors are even getting financial reports, and only 3% of them know what it means.
How to read it, yeah.
To have somebody in your corner, like we're talking 1.5% of investors that understand this, like this side of the game.
Yeah.
So those, like, we all want to beat our competition or be better or contribute more to our organization or whatever it is. Like, just simply doing this one thing puts you in the top 2% of real estate investors.
Yeah.
Right? You're not going to immediately overnight be like, oh, I have $100 million portfolio.
Yeah.
However, it's going to get you on the track of, how do I get to that $100 million portfolio, and what am I tracking? How can I afford to hire a new person? Can we afford this marketing? Like now you can start playing with the dials and levers in the cockpit, because now you're the pilot and you're not just flapping your wings, right?
Yeah, throwing spaghetti in the wall.
Yeah.
One thing that it does too, and I think, I mean, the psychology of it plays a big role, right? It gets you into habits, into a certain set of habits. For, I don't know, thinking forward, right? I don't know, if you want to put together a portfolio, and that portfolio, in that portfolio you need $500,000. What do you already have the habits of allocation, right? So you can figure out a percentage for that, create an account for that, and then you just create a new leg for the thing until that's fulfilled. So, 100%. But if the habit is there, like it's only a matter of pivoting, certain things as you're going through the process, which is really cool. So
yeah, because if you're at, like, if you're doing, let's say 3-5 flips, or let's call it a smaller investor, and you're going to be uncomfortable allocating $20,000 to the tax account, wait till that number is 2 million.
Yeah.
Right? Like, wait till those numbers are bigger. And if you can start developing that muscle at smaller numbers, then those bigger numbers, you're going to be the leader, right? Your position's going to change in a way where you have authority. You are the leader. Like, you're confident in what you're doing because you've done it. And when everybody else is freaking out, you're like, dude, I've been doing this for the last 2 years. Another
thing that it's done for me, it's helped me manage my financial thermostat. So you come to the if I used to think about $1 million, right? And then I didn't know what $1 million was like in terms of expenses, and like, what do I need to do to get to that $1 million? How much is that $1 million going to cost me, right? Like, okay, cool. It's really cool to see it there. Like, I know it's a number. It's on the P&L. It's like $1 million, boom. But how much did that cost me? Again,
how much did you keep?
Yeah. So what I'm trying to, exactly, how much did you keep, right? So that the financial thermostat used to tell me that $1 million, I mean, it's not really worth $1 million, right? Because there was a lot of fogginess in terms of, okay, what did I have to do to get to this point? How much did I spend? Did I really keep, even a remotely similar number than that $1 million? But now, like, when you have, when you get to it through this point, you start seeing those numbers, and you start seeing just the percentage and the allocations increase, and you're comfortable, right, with the taxes. You're comfortable with the stuff that has to go out. You have to have a good, healthy operating expense account, for example. You have to know how much you're bleeding in your business, right? So that puts you in a whole another level. Now, when that plays into it, your financial thermostat gets adjusted. And then you're seeing, okay, my real revenue, I mean, it wasn't $1 million, it was 250. Okay, cool, that's where I'm at. But if I grow that 250 in a very, very solid way, because I know that all the rest of these things are taking place, your financial thermostat gets reset, just gets better. So there's a lot of things that play into that. I mean, financials, bottom line revenue, real revenue. I mean, those are of course obvious, but in terms of performance and habits and like the entrepreneur mindset too, like it's evolution. Put as much emphasis in your business or put as much emphasis as you do in your business to learning the financial aspect of things.
100%.
Yeah. Bro, thank you so much. Like the breakdown of how to actually lay it all down in your business. I mean, it's kind of like drinking from a fire hose at the beginning, right? But if somebody has questions, I mean, where's the best place to find you guys?
I would say, guys, if you're looking for a profit analysis on your business, or you want to schedule a call and you have a couple questions, or hey, I want to maybe work with you guys. I have no idea what I'm doing, and I have market's going crazy. I have interest rates going up. Like, what's going on? And you guys need some guidance on it.
It's insane. It's insane. Yeah.
Go to the reibookkeepers.com. We'll put a link somewhere.
reibookkeepers.com. Yeah, we'll drop
/investors.
/investors.
Yeah, you get to see a nice little video of me. I'll talk to you for 2 minutes, and then there's a little schedule Calendly link. We can schedule a 15-minute call, and we'll definitely help. Like, worst case scenario, we'll run a profit assessment. Yeah. We'll answer some questions, and we will point you in the right direction. We have tools for you to do everything on your own. Like, we have DIY guides for almost everything. And then obviously we have done for you services. Yeah. And we just want to help a lot more investors get clarity and grow that real revenue. Yeah. And work with the habits and not be super scared when Uncle Sam says,
dude, I am telling you. I remember the first surprise that I got where I had to pay a good chunk of taxes, and I was like, what? Like, that's what is this thing?
What about deductions?
Yeah.
You're like, everybody thinks like, a CPA is just gonna save you.
You're tapped out, homie. Yeah, so it's important to think ahead and plan ahead for that kind of stuff. So it's reibookkeepers.com / the reibookkeepers.com / investors, and we'll drop the link on the show notes. Social media, are you active on social media? Do people find you there too, or?
Yep, the REI Bookkeepers.
Same thing.
Instagram, Facebook, LinkedIn.
Boom.
We're jumping YouTube and TikTok here in the next couple of weeks, so we'll be everywhere.
Kat, jump in the.
Kat's here with us.
Yeah, Kat's it's backstage. She is the genius behind the
Kat's
success.
The real genius.
So.
Hi.
So.
I'll just spot it out for a second.
Yes.
Yeah, hi everyone. Coming in the end of the podcast.
So yeah, the reibookkeepers.com / investors, and then you're gonna be able to talk to Kat and Matt, and then just, I mean, at the very least, have an awareness of where your financials are. It's very important, right? We focus a lot on the business side of things, focus a lot on the mindset side of things, but what about the dollars? What about the cents and dollars? I mean, that's really important. So. Yeah, definitely take advantage of that, guys. Thank you so much for being here. It's really cool to come in and then just do a follow up on the original podcast. So you went from a handful of clients to 30+ clients, and growth through a very, very hard time. I mean, I think so that shows success. It shows character. It shows tenacity, and obviously results, right? Otherwise you wouldn't be growing. Yeah. Results for your clients. So awesome. With that being said, family. There you have it. CO Pulse Podcast, where you get the real, the raw, and the mind of entrepreneurship. Stay focused. You got this.
Yeah.
Boom.